Good day, investors. My name is Lawrence, and thank you so much for watching this channel. A channel mainly talks about investing in the stock market, personal finance, and also how you can be financially independent. Today, I'm going to be comparing two of the safest investment options, and one of actually investment option is rarely talked about in the public, yet its investment return is amazing. And today I will be encouraging you, I'll be asking you to start looking into this so that you can also start investing, because actually there is a myth that most of the people think about. They think that, for example, if you're seeing the treasury bond is for the rich people, if you don't have enough money, you cannot invest in it. So today we are going to be comparing two investment options, and one is money market fund, and the second one is a treasury bond. So if you're familiar to my channel, definitely I'm very sure you have seen or you have watched most of the videos I'm talking about money market funds, but I've not yet talked about much about the treasury bond. So in simple terms, let's first define what a money market fund is. So in simple terms, you can call it a collective investment scheme where an investment manager or a investment bank or an individual or any licensed collective investment scheme collects money from the public, which might be you and the other person, and invests it on our behalf. So basically, the way it works, the investment or investment company collects money from us, and at the end of the day it invests on our behalf. It invests mainly on safe investment options, also like treasury bonds, and also some of them they invest in stocks, in fixed income. So basically that's where they normally invest. But what is a treasury bond? So a treasury bond is basically where an instrument that the government uses to borrow money from the public for different, definitely, projects. It can be salaries, it can be infrastructure, it can be development. So the government borrows money from the public, and at the end of the day, it gives them attractive interest rates. So basically, that's what it is. So you may be asking, how much do you need to start investing in these investment options? In money market fund, when I was starting, actually the minimum that I paid was 50,000. It's not like I paid it, I started investing in it, because they don't charge any money when you're starting to invest. In a treasury bond, if you're in Uganda, mainly this video is for the Ugandan, though it's a global topic. So if you're in Uganda, you start with Ugandan shillings, 100,000 shillings. So basically, that's the briefly about money market fund and treasury bond. So why would you want to invest in money market fund rather than treasury bond? So in the most I can say advantage of money market fund over treasury bonds is its flexibility. So what do I mean by flexibility? You can actually get your money anytime, any day you want in a money market fund without any charge or without losing your capital or losing your minimum investment. So if, for example, you put your 100,000 today and you wanted it back, maybe for example tomorrow, you may not lose the money apart from the transaction fees only. But if, for example, you've put your 100,000 today in treasury bond, for example, because for it is based on the percentage interest that is prevailing in the market on that very day. For example, if you bought bonds at 16% and you wanted it tomorrow, you may not get the same money. You may even get up to 80,000 or 90,000, because it has fluctuated and people are willing to give you less money. So that's one of the most advantageous in money market fund. So for example, if you are constructing, or if you're building the emergency fund, or if you have money and you need it in near future, maybe within a year or less than 1 year, I highly recommend you to put money in money market fund rather than in a treasury bond. So where does treasury bond become more advantageous compared to money market fund. So treasury bond, definitely, if you're following the treasury bond market currently in Uganda, it's very, very high. It's crazy. It's very encouraging because up to 17, 18% for the treasury bond of 20 years. So treasury bond gives a high interest rate compared to money market fund. Money market fund normally currently it gives between 10 to 12% maximum, but for the treasury bonds currently they are giving between 17 to 18%. So you can see the difference is almost 6 to 8% or 5%, which is almost double. So if you don't need money in the near future, for example, you don't need money in 1 year, in 2 years, I would highly recommend the treasury bond. And just to clarify, treasury bond, the years they begin from 2 years up to 20 years. So money market fund, for them, they don't have any time. They only fluctuate according to the how their investment are doing. So basically that is what it is. I also created an Excel sheet where I'm going to be comparing treasury bonds and money market fund and see how much you can be making in treasury bond if you invest in treasury bond rather than investing in money market fund. But before, you may think this is a theoretical that you cannot get 17% in treasury bond. I'm going to be showing you the last 3 months auctions that were made by the Bank of Uganda. Treasury bond auction, Bank of Uganda, treasury bond. So I'm going to be showing you how high currently the treasury bond are so that you don't have to say treasury bond auction results, treasury bonds auction results and yield curve. So if you go to treasury bonds, where is the treasury bond, Bank of Uganda, treasury bonds. Okay, let's go to results of the bond auctions. So we have here the May 11th June, which was recent. So you can see, for example, if you had a 2-year bond, you'd get 15%, but it has 20% discount, 20%. This one, 16%. And the best one, I would encourage 100%. If you had invested in the 15-year bond, which will be 17.795, 17.795. If you deduct the tax, which is 10%, it will be approximately 16%. You can never get any investment that gives you 16% net that actually that you don't need a hustle. This one, you just put your money and also you'll be doing your own business minus. So this is another one which was for May. You can see May. There are so many of them actually. 3-year, 5-year, 10 years, 10 years. So you can see they are giving 17%. If you deduct, you will be finding up to 15. So that's how high they. Let me show you also April. It is the same. April is the same, it's giving 15, 16. So I encourage you the one for 15 years. You can see it gives you 17. So the higher the years, the more the years, the higher the interest rates. So this is practical knowledge. So there is nothing like it's a theory, it's a practical. You get 15 and above percent if you invest in a treasury bond. There are very few. business that you can do that they give you 15 and above if it is not entrepreneurship, or they are very, very, very highly risky businesses. So this is a money market fund. For example, as I told you, most of the companies, they are giving you 10 to 12. So I've given you the average of 10.5%. So for example, you have your 10 million and you put in, and every year you're adding 10 million, a million. Definitely, it's always encouraged to keep on adding so that you get the best value of your money, and also so that the effect of compounding. Actually, in Uganda, there are around 7 um, collective investment schemes where you can invest your money. There is Cornerstone, which is new. We have Zeno. Zeno actually is very, very innovative currently because you can use your mobile money to do this. We have Sanlam. We have Stanbic Securities. We do have we do have Britam. So we do have a lot of them. We have also the insurance company of East Africa. We do have UAP. So we do have a lot, which is 7 of them. So which you can use. It doesn't matter on which one, because all of them, they are strictly regulated by the capital markets of Uganda. So you're 100% sure that you're not going to lose your money if you invest in these schemes. So basically that's what is. So for example, if you put your 10 million as an initial capital, as I said, you can put any amount, but this is, for example, if you invest lump sum, it's always a great idea. So for example, let's say today we are in June. So if you put your 10 million, you keep on adding, even if you don't have to add, you can just remove the amount. It will still be able to give you more money, but it's encouraging that if you're able to put a lump sum of 10 million, you're able to save 100,000 per month. So, and if you put a million per year plus this, at the end of the 10 years, definitely 10, 20, 35, you see you can almost be in 49 million in 10 years when you only put, for example, 1, 2, 3, 4, 5, 10 million, almost 20 million, but you can see you have doubled in 10 years. It's there are very few businesses where you double your investment within 10 years. So if you go to the bonds, which is one of currently my favorite, so you can see if you put, actually currently I've put 14% because there is some months where you even get up to 16%. So the average that I've given to this, actually for now, you can even give it to 15% because I've seen that actually it's very possible to get 15% per annum if you fold it up, especially if you're investing for the long term. You can see that we are getting 16% currently. So this is a very realistic percentage net of the taxes. So for example, if you get your 10 million and in 10 years, you'll be having 70 million. So for example, if you get, let's compare how much you would get, how much would be losing if, for example, you, let's say treasury bond, which is 2015. So I would say that is our 70 million. You subtract by money market fund, which is 49. How much will be using? You see, if you did not invest in treasury bond and you opted to invest in money market fund, you would be losing 20 million Ugandan shillings. And the good thing with this compounding thing, if you leave it for the next few years, you'll find actually in the next maybe 15-14 years we'll be having 100 million shillings, yet you started with the 10 million shillings. So that's what investing. And actually I want to dispel this myth that actually that treasury bond is for the rich people. As you heard, treasury bond minimum capital that you need to invest in is only 100,000 shillings, and you should take advantage of this because the banks do not charge. You just have to put in your 100,000. You go to the banks and you check, you ask for the highest return possible so that they will advise you. You also ask them to check to give you. You can also go actually to the bank, and also when you're knowing which kind of bond you're going to be buying. What else do you need to know? If actually there is a full video that I made on how you can start investing in treasury bonds, and also how you can start investing in money market fund. So this was all about money market fund and treasury bond. If you have any questions, if you have any doubts, just go in the comment section and also put any comment, put any question, or put any constructive message so that we discuss more about this. Definitely, if you have been watching and you have reached here, please consider subscribing, hit that bell notification so that you don't miss on other videos that will be releasing. Thank you so much for watching. Have a wonderful day. Goodbye.